DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation, Wealth, and Tax. Stewart, how are you today?
Oh, I'm living the dream here, having a great time.
Me too, living the dream. I always look forward to seeing you in the studio. I'm excited about today's show. How have you been?
Oh man, I've been living the life of leisure. Not really.
Man of leisure?
Yeah, I would love to be, but no, listen, with this crazy market out there, it's where I used to get a few calls a day, now I'm getting, 40, 50 calls a day. So, I think what's happening is even people that have great advice are oftentimes just seeking reassurance. And so for a lot of people out there that don't have an advisor or have an advisor that kind of hides from these situations, must be really tough.
Well, let's dive into that right now, because I want to ask you right out of the gate, what's happening in the markets right now, Stewart?
So very clearly we're in bear territory now. We've seen a 20% plus correction of the S&P 500. Let me pull up an S&P 500 chart here. This chart will show you where we are approximately today. That chart will show you, man, we've seen some pullback, but we're still relatively high compared to where we've been. If you kind of draw a straight line across that, we're right in line, but we still think that there's still some blood in the streets to come. There's a lot of volatility out there. And Cynthia, what I've seen is that, people, are always, they always are aggressive when the market's doing well because they want to get these big returns.
Sure.
Right? People that have crypto, for example, they are getting slaughtered right now.
Yeah.
It's just, listen, there's no perfect underlying investment. There's always some risk associated with it, right?
Absolutely.
And you just need to make sure that your risk is appropriate for, what you're willing to take, And I think the other thing to say is that, obviously we're seeing this massive spike in interest rates. Here in Arizona, we're in kind of a unique situation because so many people are coming here from other states. Yeah. They want the lower tax environment that we have here in Arizona. And, but it's still putting pressure on real estate. So now we're seeing a softening of the real estate market. A lot of our clients over the last year or so have really put themselves into a position where they said, look, let's take some chips off the table. That's not just in the market, the stock market, but also the real estate market as well.
Sure.
And so a lot of these big, landowners here that have been able to, have tons of rentals and make a great income from rental income are now starting to liquidate properties. We're seeing that quite often. We're seeing a little more inventory on the market than we've seen in the last couple of years. So we think it's going to put some downward pressure on housing prices as well.
Sure, absolutely. Stewart, I should also ask you, let's talk about right now the supply chain. What are things looking like with our supply chain overall?
Well, it's not as bad as it once was. So the supply chain is still broken. They've done a pretty good job of making the ships stay further offshore, so we can't actually see them lining up off of Long Beach and the California coast here. So they're making them stay further out to sea. But still, we're hearing it's better. Supply chain is getting fixed on sort of retail commodity items and so forth. But obviously now we're having a supply chain issue with beef. We're seeing, massive beef shortages now. There was a bunch of issues. Thousands of cows were killed here very recently here, and that's that's how you eat beef, right? They come from something. They come from cows, right? Yeah. And but with all the stuff happening in Ukraine and Russia, there's a massive wheat shortage here, so we expect that inflation to be pretty substantial as well.
Wow. Okay, let's talk about that. Let's talk about inflation for just a moment. Gas prices, what are we seeing with that right now?
Oh my gosh, $135 yesterday to fill up my tank. And that's a car. It's not a truck. It's not. It's a big sedan, but $134, $135. It was unbelievable. I think fuel price is the center of what we're, addressing here. That's the big problem is we're paying way too much for fuel, and that trickles down to everything. Because remember, if fuel costs more, your Uber driver has to fill up his tank, and it's going to cost more to take an Uber. It's going to take more to, cost more to get a delivery. It's going to cost more to get that Amazon package to your front door.
Yeah,
yeah, right? Oh no, guys, I wish they'd end Amazon tomorrow. My kids have figured out this darn app, and oh my gosh,
it's the best thing ever.
No, it's not. It's horrible. My kids just Yeah, my kids have discovered Uber Eats and Amazon, and it's crazy. But no, seriously, I mean, all those costs are going to go up here. So, we're seeing massive inflation all over the board here. And obviously, the Federal Reserve's response to that is to raise interest rates. And we saw a 0.75 point interest rate hike, or 75 basis points. And it sent shocks throughout the market. We haven't seen that in years.
No.
I mean, couple decades here. I mean, it's just unbelievable, to have a 75 basis point. Usually we're used to these measured responses, 25, 25,
Absolutely.
25, or 25 skip, 25 skip. I mean, they just went and, I think they're using a sledgehammer rather than a screwdriver. I think they're addressing completely the wrong problems, because when it comes to inflation, they're not addressing the cost of fuel. This administration has basically taken a position that, they're anti-oil. And I get it. Listen, it's no secret. That's how Biden ran his whole campaign. It wasn't a secret. He wanted to put an end to fossil fuels. Well, guess what that means? That means $135 a tank for gas.
Yeah.
And it's hurting. It's hurting people.
Sure, absolutely. Let's talk a little bit about Jerome Powell. Did he signal a tighter policy with 4 raises?
Yeah, I mean, so once again, the 75 basis point interest rate hike is looking like it's not the end of it, too. It looks like, obviously, they try to get a couple of these hikes in one. But, we were expecting 50 basis points, but they went to 75. We may get another one, a very similar increase in the future here. So, once again, they're trying to do that to slow down inflation, but the quickest way to do that is to create some domestic sources of our own fuel. And I'll tell you what, a lot of people are really concerned. But remember, just like Warren Buffett says, when other people are greedy, you need to be fearful. When other people are fearful, you need to be greedy. And right now, people are scared. The market's down 20+%. But what that signals to me is opportunity. And whether or not you take advantage of that opportunity, right?
Absolutely.
And right now, people realize we talk about taxes every single week. We're in this massive tax window discount. So, but that ends in a few years. It only lasts till 2025, the end of 2025.
Yeah.
And what we're saying is we are in the most efficient tax window in history right now. And you need to take advantage of it. Combine that with the fact that we have basically a 20% plus discount of the stock market. So what can you do? How do you benefit from that? Well, number one, you need to have a plan.
Yeah.
But what we're doing today, because it was so successful last week, is we're issuing a challenge to our audience today. And we're calling it the Roth Conversion Challenge. We did it last week. We're going to do it again. And what that challenge is we're trying to extend an offer to you to see whether or not a Roth conversion makes sense. And what a Roth conversion is when we convert your IRA to Roth, you have to pay the tax now. Remember, you're doing it at a discount compared to the other tax environments. But because the stock market is also down 20+%, you may be able to enjoy the boost, the rebound of this market, all tax-free. Maybe it makes sense, maybe it doesn't. What the Roth Conversion Challenge is today is the challenge to you to take action, to see whether or not it benefits you. If you give us a call at 833-652-7829 or pick up your phone, click on that QR code, what we'll do is we'll take a look at whether or not you can benefit from a Roth conversion. And what we're going to do as an incentive, if you take advantage of that and you have $250,000 of more of investable assets, you bring in those statements and we do the complimentary portfolio review for you. What we'll do is we'll give you a $50 gas card, complimentary, no cost, no obligation. It's just us investing in you, saying that we want to see you make a difference, make a change. People never make a change. They rest on it. It's why they stay in bad relationships. Yeah. But if you take action today for the first 15 callers only, what we'll do is we'll give you that $50 gas card.
14. I'm going to grab one. Thank you, Stewart. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We're going to take a very short commercial break, as we mentioned, but also when we come back, I want to talk to Stewart about Social Security. So stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation, Wealth, and Tax. For a second there, Stewart, I was so involved in what I was going to ask you next that my mind just flatlined. Do you ever do that?
Well, I don't think the name change helped either. When we took off I mean, listen, first people said our name was too long, then I changed it from Asset Preservation, Tax and Retirement Services to Wealth and Tax. Try to make it easier, but all I'm doing is adding confusion.
It's so funny. Well, thank you for forgiving me for that one, but I just wanted to talk to you.
We've had the name for 25 years. We've got to change it up. And
I love the change.
Change is in the air.
I really do love it. So I do want to talk in this segment about Social Security, because obviously a lot of people in the viewing audience today, they could be approaching those years. Maybe they're already in those years. Any planning that you can do in that area involving Social Security? Yeah,
I think number one, we have some really neat software to tell whether or not it makes sense to file early or file late. And first of all, there's some basic rules you need to understand. But what we are offering as part of our complimentary portfolio review is that Social Security analysis for you. All right. So what we do is help you understand the basics. The number one, the earliest you can file. Most people realize the earliest is 62 and the latest is 70. But there is a moving part in there, and that moving part is called full retirement age. And right now, full retirement age for most people is 66 and a half to 67. And that is a moving part. They've never moved the earliest and the latest, but they're moving full retirement age. In fact, Lindsey Graham and even Bernie Sanders they're taking part in this committee right now to look at extending Social Security. And part of the things that are on the table are making it so that you have to file later. So it's a big consideration. I'm paying very close attention to the changes in the laws here. We promise you to keep you informed if we see that change, but it's really important. So how does that full retirement age matter to you? Well, remember, if you take Social Security before full retirement age, you're getting what they call an actuarial reduction. If you take it later, you're earning what they call delayed retirement credits, and it's an 8% credit per year. But the reason I mention it's a moving part, full retirement age, is that if you take it early, you're getting reduced for the earlier you take it. So, for example, previously when the full retirement age was 66, when you took it at 62, the actuarial reduction, it's a mouthful, just like the company name. I'm sorry, or I'm just a mumble mouth. I don't know which one it is. But either way, the full retirement age, when it's 66 and you took it at 62, you're getting an actuarial reduction and you're only getting 75% of your benefit. Well, now by moving the full retirement age to 67 or even 68 in the future, which it looks like might happen, your reduction is even higher. You're getting less and less benefit. So remember, by taking it at 62, you're getting more and more penalized as full retirement age moves back. So that's really important to understand.
Okay.
Number two, what full retirement age also signifies is whether or not you pay penalties on Social Security if you're still earning income. Now, that doesn't apply to pensions or 401ks, but it does apply to W-2s if you're still working, or 1099s if you're self-employed. And here's the thing. When it comes to that, people always say, they've always said, oh, I'm going to retire. And when they say I'm going to retire, they're usually talking about filing for Social Security. But remember, quitting your job and filing for Social Security are two different decisions to make. So retiring doesn't necessarily mean filing for Social Security. They're two independent decisions. And the reason that's important is if you file for Social Security before full retirement age and you decide to go back to work, well, you can only make $18,000 or so of earned income. And for every $2 you exceed that current threshold, there's a $1 reduction in your benefit. So you could end up not only, getting penalized, but it's also taxable as well.
Wow, Stewart, thank you. I wanted to also ask you any changes, if you will, with Social Security, anything that we should be aware of right now that's coming?
Yeah, well, Social Security is one of those things I always told people it's a protected thing. No one's ever going to touch it. Well, guess what? I was wrong. In 2015, under the Obama administration, Social Security was highly reduced. And it was highly reduced in the name of, taxing the wealthy, right? Basically, they took away the file and restrict, file and suspend options because they said only the wealthy people benefit because they're the only ones that can afford to delay taking Social Security. And basically, it allowed you to use spousal benefits, delay your own, and grow your own. Well, those went away. Well, right now, they're talking about even more changes to Social Security. A, making it more taxable. B, making it so that you have to file later. And that's all in the name of extending Social Security benefits. Because remember, Social Security, back when it was originally created during, the New Deal, Franklin Roosevelt's era, was there was 40 people working for every one person that was collecting benefits. Now it's 3 people working to one person retired. So so there's less and less people supporting it compared to the people that are on the benefit itself. And people are living longer.
Yeah. That is true.
Right? So what do? They tax the wealthy. And wealthy is just how you define it.
That's true.
And the question is, do you want the Congress to define it, or who should define that, right? Well, even Lindsey Graham, who's a pretty staunch conservative, has said, listen, I make more money, I'm comfortable having to pay more. Well, that's your representative there for you.
Wow. Well, Stewart, obviously, those are some really big changes. Why wasn't there more of an uproar in the media?
Well, you know what? It was weird. Like, even during the 2015 hearings here, and when that was signed into law, it happened like a lot of laws do. Happens in the middle of a night on a Friday, so it drips out over the weekend, and by Monday, nobody cares. And honestly, listen, I mean, obviously the media is complicit. They've picked sides. I mean, they always have. They've always been very left-leaning. And at the end of the day, I understand I'm a centrist. I happen to be a moderate Republican that went to the most liberal school in the world at Berkeley. So maybe I'm a confused individual, but I try to be fair. I think I'm kind of not a far right guy, not a far left guy. I think I'm a guy right down the center here, and I like to see things objectively. And at the end of the day, the media have picked their positions. They pick their favorites, and they always have.
Yeah.
So in the big question now moving forward is, what are these changes going to be?
Yeah.
A lot of it's going to center around taxation and how much income you have. It's a lot more difficult to tax wealth, although Bernie Sanders wants to and Elizabeth Warren want to tax wealth. It's a lot more difficult to calculate taxing wealth because when you have big capital assets, how do you tax a building? It's a bit of a problem. But taxing income is a big issue. And what we're going to do here in our next segment is talk about how to create a more efficient tax plan going into retirement. And part of that is whether or not a Roth makes sense for you and a Roth conversion makes sense for you. And once again, we're extending that Roth conversion challenge to our audience here today. And what that Roth conversion challenge is we're challenging you, the audience, to bring in your statements. If you bring in $250,000 or more of investable retirement accounts, what we're going to do is we're going to analyze not only the risk of it, the fees you're paying, but we're going to see whether or not a Roth conversion actually makes sense for you. Because remember, we're in the most efficient tax window in history right now. Not only are we at a discount because the market's down, we're in a massive discount when it comes to taxes. So we have this great opportunity right now to convert to Roth for people that would benefit from it. But you have to take action. So for the first 15 people, we're going to give out a complimentary $50 gas card to the first 15 people. But you have to take action today. Give us a call at 833-652-7829 or click on that QR code. All you need to do to get that gas card is show up to our meeting, participate in a complimentary portfolio review. We'd be glad to help.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We're going to take a very short commercial break, but don't go anywhere. When I come back with Stewart, we're going to talk more about tax planning and the Roth, so please stay tuned.
The landscape of technology continues to shift at an astounding rate. Disruption across industries provides high potential for growth in established and developing companies. As a result, investors who have high tolerance for volatility have the potential for significant returns. Introducing the Foundation's Unconstrained Portfolio, an actively managed portfolio that focuses on long-term disruptive growth. Corporate stocks and ETFs are chosen through fundamental and technical analysis with a focus on strong growth potential. This strategy seeks to invest in companies that are innovating our world today and into the future. Learn more about a high-octane portfolio seeking maximum growth for your investment. Discover more today.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation, Wealth and Tax. Got it out that time.
Easy, it's easy.
Right?
Keep it going, yes.
Hooray, we're on a streak. So I wanted to talk to you in this segment, Stewart, obviously about the importance of not only tax planning, if you will, but let's talk about the Roth and how that could help someone overall with Social Security and all types of planning for taxes.
Yeah, so with Social Security, just remember, taxation on Social Security is all based around one word, provisional income. And most people have never heard that word. Oftentimes, when I used to do these big workshops and seminars on Social Security, I used to issue a challenge. Who knows what provisional income is? Raise your hand. And literally, I had 2 people the entire time. For like 4 years, only 2 people knew what it was. Well, they kind of cheated because they went to a previous seminar of ours. But so it's not really fair, right? Even CPAs don't know the reference of provisional income because it's such an obscure thing. But what it is, provisional income is actually the calculation that's being used to determine whether or not you have to pay tax on Social Security. And for most people that are couples, they're going to see, most of the people we see in our office are going to have between $800,000 and $2 million of Social Security benefit if they lived a normal mortality. So that's a lot of money. We have people that come in with $500,000, $1 million, $2 million, and they really care about planning that. Yeah. But they don't seem so concerned as much about planning for Social Security, which is really weird to me, right? It doesn't make sense.
Yeah.
But once we show them how much value it is, they're like, oh my gosh, of course we want to plan this, right? So it's important to plan. Now remember, Social Security in 1983 became taxable for the first time. What it is determined by provisional income, like I said. Now, what Social Security taxation and provisional income is it looks at your taxable income. It looks about your IRA distributions. It looks at your pensions. It looks at, any sort of taxable event. If you have rental property income, any business income. It also looks at any tax-free municipal bond income you have as well. You add all of that up and add it to 50% of Social Security, and that is your provisional income. Now, right now, the threshold for individuals is $25,000. And that threshold was set back in 1983, and it was never adjusted for inflation. So it's super easy to make your Social Security taxable. And like I said earlier, Lindsey Graham and Bernie Sanders are looking to raise the taxes on Social Security in the future. But what isn't seen by this provisional income calculation is Roth income. So your Roth income, once you file for Social Security, is completely invisible right now to whether or not you pay taxes on Social Security. So a lot of people don't realize they could potentially, in some cases, pay no tax at all on Social Security on this $1 million, $2 million benefit they have in retirement throughout their lifetime. Do you want to pay taxes on that, or do you want it to be tax-free? More importantly, or more realistically, do you want to be paying 22% tax on that, 25% tax, or do you want to pay 12% tax? It's all about tax efficiency. For most people, we can't get you tax-free, but we can certainly look at making you more tax efficient. I think it's really important. When you have a Roth, that income is completely invisible. I've said that multiple times today. It's invisible to Social Security. So what we want to do is issue that Roth conversion challenge to you. And that Roth conversion challenge is, what we'll do is, of course, we'll look at the risk and the fees, all of that inside your portfolio during these turbulent times. But what we're also going to do is we're going to cash flow out your Social Security. We're going to look at how much benefit you have over your lifetime and whether or not we can, convert your Roth and make it more tax efficient. But you have to take action today. So once again, for the first 15 callers, you give us a call at 833-652-7829, or even easier, pick up your phone, click on that QR code that's on your screen right there, and click on complimentary portfolio review. For the first 15 people only, we only have room for 15 this week. What we're going to do is give you a complimentary $50 gas card. But A, you have to call. B, you have to show up. And C, you have to let us do a complimentary portfolio review. There's no obligation to become a client. We're not saying that you want us to become you want to be one of our clients, and we're not saying we're taking you. We're simply saying that we're willing to give you a complimentary second opinion. And a lot of people just say, look, I'm not the kind of person that calls a TV show. Yeah. I'm not that person. Well, let me tell you, we have seen the who's who of Arizona respond to our TV shows, and it would be surprising to you. You should be one of those people. 833-652-7829. Give us a call. Click on that QR code. We'd be glad to help and see whether or not you can take advantage of this down market in this super efficient tax window that we're in.
Well, Stewart, what it always comes down to is the need for proper planning. We've talked about this in the past. A lot of people are apprehensive or they're nervous to pick up that phone and call in, but you've given them every reason in the world to do so. You're so approachable, you're so easy to talk to, and like you said, there's no obligation. You just want to get to know them as a person.
Absolutely. I'm slightly over-caffeinated right now, so it may be a little obnoxious on TV. What I got in here is a little energetic for me, but no, give us a call. Listen, we're likable people. I may not be, but the other advisors are for sure. But give us a call. We'd be glad to help. Just take action.
Stewart, thank you so much. To the viewers at home, thank you for spending time with us today. That number is 833-652-7829. Thank you for watching the Asset Preservation Hour. Be safe, be happy, and be blessed. We'll see you back 1 week from today.